Welcome back to this channel. So in this video, I'm going to explain what's going on with Bitcoin and why it seems to be going into a bear market. And I'm going to explain my reasons why that's not actually the case and why you shouldn't fall for the FUD. But let's just have a look at the market really quick. So we topped out at what, $108,000 earlier in December last year. And as you can see, we've already dropped by 20%, but that's not really the worst of it. I mean, what's been getting the worst brunt of the price movement has been the altcoins. Now, this has been a trend that's been going on since the Fed came out as being less than dovish as people would expect. And as a result, tech stocks and altcoins are sliding really badly. But this is not really anything to do specifically with Bitcoin and altcoins. It's got to do with the overall stock market. And one of the big things that happened in, I think it was late December or maybe early January, something that kind of pricked the bubble of the burgeoning stock market and the crypto market was, as I mentioned, Jeremy Powell simply came out and said that they weren't going to do as many rate cuts as they had originally planned. And this is when Donald Trump had won. So the speculation by people like Arthur Hayes, who I'm going to talk about shortly, is that, the Fed is somewhat politicized and they're willing to cut rates before the election in the hopes of allowing Kamala Harris to have the best chance of elections, so they could say, look at Biden's economy, look at all the money that we printed, look at all the jobs we've created, etc., etc. But now that Trump is in office, it looks like the Fed is less likely to play ball, and we're having these talks of not as many rate cuts as people expected, but that was enough to tank the market. And I think this is something that there's a political angle to this, because now Trump can essentially be blamed. And when you look at the fear and greed index, we are now in extreme fear, whereas only two and a half months ago, we were in extreme greed. So you can see there's been a real sentiment shift, but I'm going to go into why I think this is all FUD and you shouldn't worry about it. But before I go on, I just want to shout out my sponsor, Local CoinSwap, which you can use to buy cryptocurrency without KYC. Every time you go onto a centralized crypto exchange and you have to provide your proof of residence and other personal information, you're essentially de-anonymizing your crypto usage, right? Because you have to provide information about yourself, and then you're going to go buy Bitcoin, and then you're going to send that Bitcoin into cold storage. Now that wallet address is presumed to be owned by you, by whoever's looking, and this isn't a very good thing. So what you can, it's best to buy cryptocurrency without KYC. Local CoinSwap is my number one pick, but you've also got HODL, which is what you'd call a non-custodial crypto exchange. That means none of the funds are stored on the exchange itself. So when you're buying from somebody, that person who's selling it to you is sending it directly from his wallet to your wallet. So if there's ever like an FTX situation or a Mt. Gox, you're not going to be left with the fallout. And I also recommend bitvalve.com as well. It's another great non-KYC peer-to-peer crypto exchange. So use my referral link in the description down below, and let's get into the video. So as we can see, stock market news, NASDAQ records worst day since 2020. Dow falls 890 points. S&P 500 tumbles after Trump doesn't rule out a recession. So the last major dip that we had was when there was the COVID dump. If you remember, in March 2020, we had this enormous dip, but it actually turned out to be one of the greatest buying opportunities of all time. Few people could see it back then because there was so much fear about what would happen. But what needs to be understood about the markets in general is that it's quite reactionary, and it's often got a bit of a safety mechanism into it. So because of the way the finance system works, if ever there's a fear of a recession or some kind of great economic catastrophe, the safety hatch that's going to be pulled is the money printing machine, right? So what happened when there was talk of COVID and the end of the world, which it was really bad, but the point is that we were able to stave off economic disaster by kicking the can down the road and printing off 1/3 of all money in existence. It was a terrible thing, but this did like rocket ship the stock market and crypto, and this is one of the big factors that led to the big crypto boom that we had in late 2020 and 2021. The devaluation of the dollar ultimately leads to inflation of assets like crypto and like stocks. And right now we've got talks of a potential recession. I mean, it's actually, the market's so jittery. It's more like Trump doesn't rule out a recession. It's very different to saying we're going to have a recession, but just Trump saying he doesn't rule out a recession possibility, it was enough to spook the markets. But what happens if there actually is a recession, or if there's real talks or real concern about a recession? Well, the money printer is just going to go on. And I'm going to explain that shortly. But let's just have a look real quick and just see what the current official narrative for what's going on is. Treasury Secretary Scott Bessent on Friday told CNBC there could be a detox period for the economy as the new administration cuts government spending. Then in an interview that aired Sunday, President Trump responded to a question on Fox News about the possibility of a recession by saying the economy was going through a period of transition. What I have to do is to build a strong economy, yada, yada, yada. Goldman Sachs slashed its economic growth forecast in recent days because of the potential tariff effects. We are in the throes of a manufactured correction, said Sam Stovall, chief investment strategist of the. I say manufactured because it's really based in response to the new administration's tariffs program, or at least threat of tariffs, and what kind of impact that will have on the economy. Signs of investors taking off risk were evident everywhere in Wall Street, etc., etc. So there's a real concern about what's going on with how Trump is essentially transitioning the economy from the Bidenomics system to the Trump system, which it's very different, and very few people actually are quite certain about what's going on. And the stock market and crypto is very prone to uncertainty. If there's uncertainty, the market becomes very volatile. In the same way, it also reacts very positively to positive speculation. But the market isn't really liking this tariff stuff. But the moment this stuff goes away, probably the markets will bounce. But what I wanted to talk about is what's going on with the Doge stuff. So there have been, potentially upwards of 400,000 government jobs that are going to be slashed. Huge amounts of fraud, enormous amounts of fraud, upward totaling, more trillions of dollars. It's going to be slashed, and this should ultimately be a good thing. Why is it that though this positive action may result in a recession? Well, as it was mentioned before perfectly, this is kind of like a detox reaction. So for those that have been unhealthy and done a detox, what happens to your body? It goes through a healing reaction where your body actually might get more sick. It might have a fever. It might have, fatigue or whatever, because, there's like a reaction from all the toxins going into the system before you flush it out. But this is what I wanted to talk about with Arthur Hayes' perspective. Arthur Hayes is someone who I follow religiously when it comes to the Bitcoin market, and his outlook about how markets move is extremely simple. He keeps it... was it KISS? What is it? Keep it simple, straight. Oh, I forget it. That was the name of the article. And essentially, his whole theory of why Bitcoin goes up and down, and he's less of a technological pragmatist and more focused on the economics of what Bitcoin does, which is essentially the thing that it's measured by, which is fiat currency, dollars. The more that is devalued through money printing and other mechanisms, the more that the price of Bitcoin will go up. It's very simple, right? So he bases his whole model of trading simply on whether or not there's going to be an influx of money. And one of the main ways to measure this is the cheapness of money as measured in the federal interest rate. So if the interest rates go down, it becomes cheaper and easier to borrow money. And as such, you can basically long the market. And I've just highlighted a part of his long essay to outline his perspective on what's going on with the Doge situation. Moving on to the human resource side of the government spending equation, Trump and Doge are firing hundreds of thousands of government employees. It is yet to be determined if the unions are strong enough to mount legal challenges to the mass extermination of useless government workers, but the consequences are already being felt. The biggest risk is that the layoffs we have seen so far are just the tip of the iceberg. The magnitude and timing of future layoffs will determine whether the labor market can stay on the rails, D'Antonio explained. We currently expect that the size of the federal workforce will shrink by about 400,000 throughout 2025 due to a combination of the ongoing hiring freeze, deferred resignations, and Doge-initiated layoffs, according to Fox Business. The effects of Doge are clear as day. Even though the Trump 2.0 presidency is just over a month old, jobless claims in the DC area are spiking, house prices are dumping, and consumer discretionary spending, arguably driven by massive fraud and grift emanating from the US government, is disappointing financial analysts' projections. The market is going to talk about the R word. Home prices in Washington, D.C. have fallen by 11% since the beginning of the year, according to a new analysis by real estate trading platform Parcel Labs, tracking the impact of the Department of Government Efficiency's actions on the city's housing market, according to Newsweek. In a post on Blue Sky, Rothstein stated that the country is almost certainly heading towards a severe economic contraction due to the mass layoffs in government jobs and abrupt federal contract cancellations, according to the Economic Times. R for recession is the economic scarlet letter. Powell has no desire to become a modern-day trans Hester Prynne, and therefore he must respond. I don't get that reference. The Powell pivot yet again. Powell must have whiplash due to how many times he's pivoted since 2018. The question for investors is whether Powell acts proactively to save the financial system from a blow-up or reactively once a large financial player goes kaput. The path that Powell chooses is purely political in nature, therefore I can't handicap it. And finally, what I do know is that 2.08 trillion in US corporate debt and 10 trillion in US Treasury debt must be rolled over this year. If the US is on the cusp or in the middle of a recession, the hit to cash flow generation will make rolling over these gargantuan sums of paper almost impossible at the current interest rate level. Therefore, to safeguard the sanctity of the Pax Americana financial system, the Fed must act. What he's basically saying is that the Fed can't afford to allow the US to go into recession, and they've practically served this safety mechanism for the past couple of decades. Whenever the country has gone too close to the abyss, they turn the faucet on of cheap liquidity, and that has the effect of forestalling a large correction in the economy. But this also has the effect of devaluing the dollar, causing inflation. But then you also get the pump in stocks and crypto, which is what we're focused on here. So if we truly are close to recession because of these actions, at some stage the Fed is going to pull the safety hatch, and we're going to get that cheap liquidity, and we're going to go to the moon in the most degenerate way possible, which is basically, that is the fuel for Bitcoin. Just cheap, greedy liquidity, and we're off to the races. So guys, if you liked today's dose of copium, make sure to use my referral links in the description down below to sign up to these P2P crypto exchanges that you can use to help you buy cryptocurrency without KYC. They've also got hundreds of different payment methods you can use to buy crypto, whereas in centralized exchanges, you've only got your bank transfers or whatever. But on local CoinSwap and whatever, you've got, hundreds of different payment methods that are, the kinds that you would only be able to find in your country. So if you're in China, you've got Alipay. If you're in Europe, you've got SEPA. If you're in Canada, you've got Interact e-Transfer, Africa, M-Pesa. You've got everything available for you. So make sure to use my referral link in the description down below, and make sure to subscribe, and I'll see you in the next video.